Hello all and welcome back. I hope you're all doing really well. Again, a big thank you from me for the love and support on the most recent video. As always, I seriously appreciate it. This video is going to be covering a major announcement for the Hedera ecosystem in the form of the Pioneering DEX going live with a confirmed launch date, as well as some different information for those of you that have been early investors to the project, as well as what we are looking forward to over the coming week or so. Let's jump straight into the sort of market overview, and I want to touch on Quant as well in this video alongside Hedera, obviously. Taking a quick look at the market cap dominance of Bitcoin, we can actually see that Bitcoin dominance is beginning to fall. It peaked around the 11th of June, just shy of 50% dominance, and this is where many people were speculating that we were heading back into a more significantly drawn out bear market as Bitcoin dominance tends to increase. Ethereum and all the altcoins lose a lot of their market cap as liquidity is pulled from the markets as the risk off environment continues. However, we are seeing a little bit of a resurgence at the moment for altcoins in general. You've got Ethereum that seems to be powering back up into the green side, particularly as they're looking towards that proof of work transition away to proof of stake. And we can now see the Bitcoin dominance is falling. We're at roughly 43% at the moment. And this general trend since the middle of June has been that the dominance is continuing to fall. We may see further pumps for altcoins over the period as this continues to play out. However, again, it's well worth bearing in mind, we do have unprecedented macroeconomic factors at play. We've still got the Fed and their next meeting looking to push interest rates up to try and stop inflation from taking a hold of the US economy. And of course, we've got global inflation across the board as well. However, what we have seen in the past is the majority of people that do incredibly well in times of economic turmoil and recessions are the ones that are buying assets at severely discounted prices, and then they ride that wave throughout the top as we go through the boom and bust cycle of an economy, which is a very natural thing and has happened for the last 100, 200, 300 years. Interesting chart here as well with tons of different technical analysis indicators. However, it's looking at an Elliott wave count of the Bitcoin dominance, and we all know that the Bitcoin dominance charts are an indicator for alt seasons. And these sort of charts or technical analysis is predicting that we're in sort of Elliott wave count, impulse wave 3s in progress. Again, I don't particularly enjoy technical analysis so much, as sometimes it does appear to just be lines on a chart. However, it's interesting to see these different perspectives on what's happening. You've got the macro perspective and then you've got the sort of technical perspectives. But we're seeing that potentially an alt season may be around the corner, and that's being reflected in the prices of these altcoin assets. We can also see the global cryptocurrency market cap has finally reclaimed that significant $1 trillion mark. So we are seeing some risk on take place again throughout the cryptocurrency space. And a lot of this is being reflected, as I've mentioned many times now, in the prices of these assets, particularly those like Quant, other interoperability chains. Hbar has been doing quite well recently. Of course, Ethereum's been doing very well. I think 𝗟𝗚𝗚𝗏's had a little bit of a run, Chainlink, plenty of others. Quick mention about Quant. Just wanted to do a deep dive. I mentioned it again in quite a few videos recently and way back in the past. It's been performing incredibly well over the last 4 to 6 week period. So Quant solves some massive supply chain and trade finance problems. The problems being supply chains and financial systems use different blockchains which cannot easily interoperate. And of course, this will be expedited in the future as more and more of these financial institutions take on different approaches to help, or different integration approaches of different chains, and they're going to need an interoperability solution in order to talk. Think of how Swift works in the traditional sector. That is a messaging system, a standard for which different banks using different infrastructure can use to communicate with each other very frictionlessly. And this is kind of what Quant is looking to do in the future, particularly in the crypto space. Solution, obviously DLT interoperability, which is exactly what Quant is. So the challenge being different blockchains used by different supply networks and financial systems make interoperability difficult. Blockchain's full potential for supply chain and trade finance won't be realized until this interoperability barrier is overcome. The solution being Quant solves the issue at its root by enabling full DLT interoperability. Quant facilitates this by reducing friction in international trade, which is RFIT, and then integrated payments across the supply chain. And that's pretty much what it boils down to very simply. And that's via that Quant overledger, where enterprises and developers can have different licenses and integrate that into their system. There is tons of utility for the token. I'll be touching on the tokenomics again in a second. If we look at the performance though, over the last week, we've done 14%, and over the last month, so just around 4 to 5 weeks, 130% movement towards the upside for Quant. Obviously 37% on the year. It's actually one of the very few projects at the moment that is green on the year. You click on a lot of different projects and they've not performed very well since the beginning of 2022. For example, Hedera or Hbar here, 60% down on the year, and this is the same for many other cryptocurrency projects. Of course, I'm still buying an absolute ton of Hedera. We've got new hashtags going live, the Hedera heatwave, for example. NFTs are still exploding on the chain, and then obviously we've got this announcement for SaucerSwap, which will be a very significant DEX to bring things like sustainable liquidity farming and massive rewards for early adopters of that. Flicking across then, let's have a quick look about why Quant has the potential to be an incredible long-term investment. So token value beyond speculation, and look at EY's formula to derive the valuation of crypto assets and discuss the value, how it can be calculated based on fundamentals. You've got metrics like total addressable market size, obtainable market share for the product and service, token velocity, token supply metrics, and the token distribution. So we look at the token utility. The Quant token utility has things like licenses, overledger network, gateways, platform fees, add-on services, user licenses, community treasuries with layer 2 payment channels, consumption fees, marketplaces, open source connectors, the ability to combine any blockchain and API-based system to create new products, multi-chain oracles, gateway staking, signing of transactions, and much more. So the utility, the governance utility of the Quant token serves many different purposes and products, not to mention more in the future. Why Quant has the potential to be an incredible long-term investment. So the summary of why Quant has the potential to do this, with links to Twitter threads and other things. I will link this massive article down in the description. This is a snippet of a much wider Medium article. The market size Quant is targeting, benefits of interoperability compared to other platforms, partnerships, meetings and discussions with central banks, governments, the importance of SIA, global or globally recognized standards, network of networks, building the foundation for a new internet which is secure and inherently trustworthy. You've got collaborations with MIT, the US government, Intel, Juniper Networks, payment companies, and telecoms to create digital asset protocols. Of course, then it goes back to that token velocity, token supply. Every blockchain project, enterprise developer, and user all need interoperability, not just between blockchains, but with existing networks as well. Quant has the ability Quant has built the technology to deliver scalable, future-proof interoperability without imposing restrictions on the underlying blockchains and without the overhead/bottleneck of adding another blockchain in the middle. More articles to talk about this. Central banks and banks don't send payments over the public internet. They have mission-critical private infrastructure networks. Again, think of things like Swift. In order for the tech to be used, it needs to be integrated in those networks. This is why Quant's partnership with SIA is so important. Quant Network partner with SIA, a game changer for mass blockchain adoption by financial institutions. And then this goes on again, more about how this integration is seriously important. CBDCs are going to completely overhaul the global financial system, the biggest change since Bretton Woods. Interoperability and standards are going to be key for Quant Network, who have laid out the foundations for Overledger to be the global infrastructure for CBDCs. And that is a massive Twitter article. More information in here, however, hopefully this gives you a bit of a snippet. Previous videos as well touching on Quant that I've spoken about. The use cases for Quant and its interoperability solution are very wide reaching and have serious potential. Not only that, the elephant in the room for Quant is the tokenomics. With a current circulating supply of 13.4 million tokens and a max supply of 14.6 million tokens, obviously less than Bitcoin's 21 million, the upwards pressure of price for the Quant token is substantial, to say the least. So we can see here, if Quant had Cardano's market cap of 15.3 billion, I think that's currently rank 8, so within the top 10 of cryptocurrencies at the moment, one single Quant token would be over $1,140, which is an upside of roughly 10x from the current price. So the sheer tokenomics and how the supply have been set up, as well as the demand for Quant tokens, mean that the upside potential could actually see this token hit thousands of dollar levels, particularly as global cryptocurrency market caps continue to expand. More equity and liquidity in the markets drives these token prices even further. And then again, Quant is similar to Hbar in the fact that it has the ability to captivate enterprise rollout. These blockchains and solutions are designed for enterprise usage, and that is where you're going to see serious demand coming from. You're thinking billion, if not trillion dollar organizations scrambling to get the licenses and integration for these systems and then roll it out across billion-dollar product portfolios. You know, the demand pressure for these tokens is going to be obscene once they really do begin to take off. And this is one of the reasons why I love Quant so much, as well as chains obviously like Hbar. I will continue to be buying Quant at the moment. Obviously, it's gone through a very good phase recently. We may see a little bit of a pullback in the token price. However, that does not concern me. When you've got tokenomics like this, utility like this, you know, the future is very bright for chains along these lines. Anyway, let's jump across to that Hedera news then. So what is it? SaucerSwap Labs, of course, coming in clutch to continue driving the Hedera heatwave with their pioneering DEX on Hedera, which will be going live on the 23rd of July. So the wait is almost over, less than a week to go, and we will be seeing the pioneering DEX on Hedera go fully live, which is brilliant to see. If I actually flick across to flicking across to the audit report then. So what the big wait was for in the end was the audit reports. These have been conducted by Hacken. If you go on Hacken's website, they are an incredibly reputable audit company within the space, auditing hundreds, if not thousands, of different decentralized protocols and applications across various different chains. We can see the three different audit reports here that took place from the 12th of July, 14th and 12th of July. All of them for the benchmark got four stars, I guess, or like 4 green points, and the audit is fully complete with flying colors. So opening up a couple of these different audit reports, obviously these are completely public, you guys can check them out yourselves. For critical, there were no high severity issues found at all. One of the high sort of priority fixes that needed to be done, of course these have all been rectified by the team, was just the potential for a DOS service, so denial of service attack. Medium, unchecked return value of a call method to potentially have the ability for a transaction to fail in case, the rent payer may not receive funds in case of a failed transaction. And that's pretty much the rest of it. There are a couple of low case things. These were then rectified, and we can see their scores for the platform themselves. And this is what the SaucerSwap team obviously pride themselves on. So for documentation quality, they scored a 10 out of 10, the maximum number of points. For code quality, they scored 9 out of 10. The architecture, and that was just because the code is not following the official style guide, so they probably docked a point there. So realistically, for code quality, 10 out of 10. Architecture quality, obviously something incredibly important for an AMM, 10 out of 10 of course. Security score only contained 2 low severity issues, the score is a 10 out of 10. And then summary, 9.9 out of 10 overall for all of the different metrics for SaucerSwap Labs' platform. So a serious level of security here, done by a very trusted audit company with a very, very strong developer team behind it. So the announcement fleshed out a little bit more, as there are a few different layers to this. I'll just grab this screenshot from the Discord server of SaucerSwaps themselves. So launch announcement, SaucerSwap will be going live on Saturday, the 23rd of June. It's official. Anyone with HashPack wallet will be able to swap tokens, provide liquidity and farm 1 week from today. Anyone that holds a Plank Epoch NFT, there is some additional information. So if any of you guys have one of those NFTs purchased early on, this may actually even apply now to those if you pick them up on Zoo's marketplace at a serious discount from when they first launched. So if you have the electromagnetic liquidity option, so for those of you who hold electromagnetic NFTs, you will be able to provide liquidity and stake your LP tokens in farms on Thursday, July 21st. So a couple of days early, you will have access to do this if you hold an electromagnetic NFT, and that was if you owned all 3 of the different levels. You received one of these a little while back. You will know if you hold one of these. In doing so, EM holders will be able to capitalize on the lower figures of total liquidity staked in farms, which has an inverse relationship with APR. Token swaps will not be enabled during this event. So from the 21st, you will be able to participate in these liquidity pools if you hold this NFT. However, you won't be able to swap tokens because that won't be live. And they also say here that inverse relationship. What this means again is that first come, first serve thing. You will be receiving a much higher share of APR in the early days of these pools when there are less users. So you have the potential to receive greater rewards of source tokens for being in these pools. Whitelist event as well. So for any of those who hold any of the Planck Epoch NFTs, you'll be able to access the full features of the site on Friday, July 22nd. So a day early, you'll be able to access every single feature, which includes the swap ones. Anybody holding a Planck Epoch NFT will also be able to perform all functions on SaucerSwap. This event lasts roughly 24 hours, with the holders being able to swap tokens, provide liquidity, and stake LP tokens in farms before the floodgates open. And then finally, we've got that public launch on July 23rd, where any user, regardless of what they hold, as long as they've got a HashPack wallet, will be able to access the platform and utilize every single feature. Couldn't be more excited to kick off Hedera's DeFi summer this week, and to think we still have more announcements to make. Onwards and upwards. So more announcements as well from the SaucerSwap team, potentially some more great features coming out in the future. Of course, I will be dropping a video immediately on the Thursday, the 21st of July, showing you guys how to get into these pools early if you do have one of the NFTs. And then again, I will be doing another video on the 22nd ahead of the 23rd, showing you how to navigate the platform for when it goes live on the 23rd. Really big stuff. And of course, like I said, announcement on there as well, the 𝗥𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦 cybersecurity audits are complete with very good scores across the board, 9.4, 9.9, 9.7 respectively, overall score of 9.9 out of 10. Here is the interface in its current form for SaucerSwap. Obviously, it's gone through many different iterations, and it is looking seriously good at the moment. We can see some different metrics on the front screen. You've got the different features that are here. You can scroll down and you can find the audits immediately. We go over to the swap interface. This is what the swap interface is looking like, looking really sleek. Same goes for liquidity. You've got the farm, and then you've got the portfolio. Of course, I'll be covering this in more detail coming soon. Now, there is one thing that I must preface all of this with, and I will cover this in a little bit more depth as well in those tutorials, but there is this early staking, because it is not single-sided staking, it is via liquidity pool. So a single-sided stake is, for example, how Stellar operates. You put your HBAR into a pool and you receive rewards based on the number of HBARs you put in that pool. Really simple and functions like a traditional interest rate many of you will be accustomed to. Liquidity pools, on the other hand, work in pairs. So you would have seen those pairs, for example, HBAR and Dovu, HBAR and Source. What this means is you stake a allocation of each of those tokens. It may be 1000 HBAR and 1000 source tokens into that liquidity pair. You are providing liquidity between those two different tokens, and then you receive rewards as a kickback for providing that liquidity. Now, how this is going to work on SaucerSwap is you will be receiving a percentage of the transactions processed on the decentralized application itself, the DEX. So you'll be receiving a percentage of those fees. SaucerSwap then do have an additional reward incentive for you providing liquidity, is that you can then take those liquidity pool tokens, the LP tokens, which are effectively a receipt, and you can then stake those to receive even more source for doing so. So it gives you more incentive and helps to also combat impermanent loss. Now, what is impermanent loss? Impermanent loss is effectively where the token prices move against you when you're inside these liquidity pools, to the point of which holding actually would have been beneficial. Now, the caveat being is that majority of the time, the impermanent loss is offset by the rewards you will receive for providing liquidity. So there's an interesting example here on Binance's website, which I wanted to quickly cover. So that's Alice deposits 1 Ethereum and 100 DAI in the liquidity pool. In this particular AMM, the deposited token pair needs to be of equivalent value. This means that the price of ETH in this example is 100 DAI at the time of deposit, which also means the dollar value of the deposit is $200 US. So $100 of DAI, $100 of ETH effectively. In addition, there's a total of 10 Ethereum and 1000 DAI in the pool, funded by other liquidity providers just like Alice. So in effect, Alice has a 10% share of the pool, and the total liquidity is 10,000. Let's say the price of Ethereum increases to 400 DAI, so ETH at $400. While this is happening, arbitrage traders will be adding DAI to the pool and remove ETH from it until the ratio reflects the current price. Remember, AMMs don't have order books, so sell or buys. What determines the price of the assets in the pool is the ratio between them in the pool, e.g. 1 million Ethereum and 500,000 DAI, for example, would drastically affect the price. While liquidity remains constant in the pool at 10,000, the ratio of the assets in it changes to make up this 10,000 of liquidity. If ETH is now 400 DAI, the ratio between how much ETH and how much DAI in the pool has changed. There will now be 5 ETH and 2,000 DAI. So it's moved towards having more DAI in that liquidity pair, thanks to the work of arbitrage traders. So Alice decides to withdraw her funds. As we know from the earlier, she's entitled to 10% share of the pool. As a result, she can withdraw 0.5 ETH and 200 DAI, which is that same percentage that she originally staked as a percentage of the pool now, totaling $400. She made some nice profit since her deposit of tokens was worth $200, right? So her initial deposit has effectively increased by 100%. However, what would have happened if she had simply just held 1 Ethereum and 100 DAI? The combined value of these holdings now would actually be worth $100. So in effect, she would have been better off by holding rather than depositing it into the liquidity pool. This is what we call impermanent loss. Because the token prices moved outside of that liquidity pool, so just Ethereum's price continued to increase, she would have just been better off holding in that instance by $100. So we could say her impermanent loss was $100 in this situation. However, these examples completely disregard the trading fees she would have earned for providing liquidity. In many cases, the fees earned would completely negate the losses and make providing liquidity profitable nonetheless. Even so, it's crucial to understand impermanent loss before providing liquidity to a DeFi protocol. So basically what this says is, providing you are receiving adequate rewards for providing liquidity, it offset any impending permanent loss that could take place. And this is why it's obviously called impermanent loss, because it doesn't always happen. Only sometimes it happens and things can be offset. And it's kind of like an opportunity cost is the best way to look at this. Hopefully this, guys, gives you a bit more information about what permanent loss is and how it functions. It's to do with the ratios in the liquidity pool. I'm not sure how bad this will be on SaucerSwap. I'm thinking that impermanent loss shouldn't be too much of a worry, just due to the fact of the additional rewards from the liquidity pool staking. Any impermanent loss that you do see should be more than offset by the rewards you will receive for taking part in providing liquidity itself on the platform. Anyway, hopefully you enjoyed this video, quite a long one. If you did, leave a like, drop a comment if you've got something to say. Make sure you're subscribed, as those videos will be coming out next week and they're not ones that you want to be missing. Until the next one, I'll catch you then. Cheers.